Welcome back, ladies and gentlemen. My name is Joshua Castillo. If this is your first time checking out the channel, welcome. I am a value investor, as well as I like to track other value investors, as well as give some information that they usually have. So if anyone comes out with an interview or anything like that, I like to track that and try to give you guys a better summary, or just try to give more information as I find it, because kind of use this as my diary of like what I'm reading, what I'm finding, what I'm looking at. So with that being said, today we're going to be looking at the 13F filings for Q2 2023. This comes out usually around 45 days after the end of the quarter. So in this case, we're looking at Q2, which ended it back in June. So the 13F filings basically give us a snapshot of what the portfolios looked like at the end of the quarter. So whatever was in the portfolio that last day of the quarter, that's what we're going to see here. A lot of times people move in and out of positions throughout the quarter. So for a lot of these positions, they may already be out of them. But it's something that I like looking at because I think it helps us get an idea of what are the ideas that other investors are coming up with, especially the super investors that we follow here on the channel. So with that being said, let's dive right into this, and I'm going to hop on over to the presentation. As mentioned before, the ending of the quarter was Q2 2023, was June 30th. Diving in, we're going to look at Lilu. So Lilu is one of the great value investors of our time right now. Warren Buffett really likes him, so tracking him is a very important thing for me. Now, his portfolio didn't really have very many changes. The activity is going to be on the right. The actual portfolio will be on the left. So the right side, you can see that he sold out of his Micron position entirely. So that's an interesting change to the business. And obviously you've seen where the market has gone as far as memory goes. But the one thing that he did add was East West Bancorp. So East West Bancorp is actually a bank, a smaller bank, but it's a bank that's based out of the United States. It has a large Asian customer base, and that's kind of their focus. And the Asian demographic is one of the highest kind of up and coming demographics as far as income and things like that. So it's not surprising to me that he found this company and kind of has a better idea of what goes into this, and also the fact that it seems from what I was reading the analysis that it has a good valuation, it has a good intrinsic value based on what it's selling at right now. So a lot of times, I feel like Lilu seems to have like the in for a lot of these companies. So I'm not surprised that he has this. It's interesting that he added to his position even more. So I would not be surprised if you see any sort of dip if he continues adding. But I do like that this company, it seems like a lot of other people like this company as well. Next up, the big portion of this video today is Michael Burry, obviously at Scion Asset Management. He's had a lot of changes. So on the left side, you can see that's what the current portfolio looks like as far as the shares held. The right side is the activity, as well as the bottom right where he actually had some contracts that he bought. So taking a look at what he sold first. So he sold out of JD, sold out of Baba, sold out of Zoom. And then obviously, if you keep going down that list, you can see that there's a bunch of banks. Capital One, Wells Fargo, Western Alliance, Bancorp, PacWest, as well as First Republic. So seeing all of those changes to the companies that he's made, it's not that surprising. JD and Alibaba are both up pretty substantially from the very beginning of this year. And then all the banks, obviously, during the whole banking crisis era of a few months that we had, not really that surprising as well. So I know that he tends to go in and out of companies as he finds value. So if you look on the left side, he's actually gone into Expedia, Charter Communications, Generac, CVS, MGM, Stellantis, Vital, Warner Brothers Discovery, Nextier, Starbulk, and you can keep going down the list. But really what I find interesting is, he goes in and out of these positions and he finds so many companies that he buys into. So it's interesting, and I would love to pick his brain. Obviously, he doesn't do interviews or anything like that, but it would be interesting to know, sometimes he has 2 or 3 positions. Sometimes you can see how many positions he has now. And more than likely, he's probably sold out of more than half of these, if not 75% of these, by the time that this video comes out. So it's interesting to me to see he waits for the companies to kind of come closer to what he thinks their intrinsic value is and sells out of them. I don't think he waits until it goes all the way to the intrinsic value mark. He waits until he gets enough value out of it and then sells out of the position. And then obviously the last thing that I wanted to talk about as far as Michael Burry goes, and kind of the title of this whole video and why you'll see this a lot on Twitter too, is the puts that he bought. So he bought a SPY and QQQ put. I'm not really that surprised that, Twitter is saying that he bought $1.6 billion worth of puts, because that's not what happened. But basically, when you report on the 13F filing, you have to report the notional value. So he has to report, I'm in control of 4 million shares. So 2 million for SPY, 2 million for QQQ, and that adds up to being in control of 1.6 billion. But he didn't pay 1.6 billion to get these contracts. He's only in control of 2 million shares each. So more than likely, if he didn't sell out, he probably sold out at most of this. There's no way he's still holding this, I would bet. Obviously, we'll see next quarter, but there's no way he's still holding this into the quarter. So I don't know. We don't know when he bought it, whether he bought it at the beginning of April or the end of June. So we'll have to see what he actually ends up doing with this. But again, I'm not really that surprised. I wouldn't be that shocked if he sold out of both of these already. But it's interesting to me, though. You'll see notes on Twitter of he's bought 1.6 billion. I don't think he would risk that much of his portfolio for the sake of buying a put. So that's really interesting, and I'm curious to see what he does with that. But again, he doesn't add any more on interviews or go do anything or go on CNBC and talk about his position. It's just one of those things, it happens and then he sells it, and then you don't really get any information beyond that. So I'm curious to see what happens, but he probably won't have any more information on it. Now, next up, we have Mohnish Pabrai. This is going to be one of the value investors that kind of has followed Warren Buffett, friends with Lilu, so it's not that surprising. If you look on the right, he sold out of Micron Technology, sold out of Brookfield Corp, and sold out of Seritage. Now, Seritage wasn't a big portion. He had already sold out that previous quarters, but Micron Technology selling out of that is a big portion of his American portfolio. Again, he has foreign holdings just like Lilu does, so it's not all being reported here. It's not 79% of his entire portfolio. So having 79% of your American portfolio be sold off is substantial. So for him and Lilu to sell off Micron is pretty interesting. But when looking at what his new pickups are, so AMR and CEIX, both of these are coal stocks. And when I did some digging on the analysis on Seeking Alpha, it seemed like a lot of people liked these companies. They don't have a lot of debt, if any. They're benefiting from the coal prices being where they're at currently. And a lot of the coal price and kind of everything from the top line is actually being driven down to the free cash flow margins, which, that's what we love to see. But the free cash flow margins are now being used because they're so high. They're being used to A, deleverage the business, which is great. And B, they're not having to spend a lot of money on CapEx right now. I think a lot of it's just going towards maintaining the mines that they currently have. So they're actually returning a lot of that to the shareholders. So they're buying back shares, they're giving dividends, and I think both companies, when I was reading about it, seem to like buying back shares more than giving dividends. So these aren't going to be huge dividend yield kind of holders. But to see them give back a lot of this is going to benefit the shareholder, obviously. So it's no surprise that he was able to find these and invested in them himself. So that's an interesting companies that I don't follow coals or a lot of the commodities at all. So to see him get into these is kind of interesting. Moving over to one of the bigger portfolios, you got Baupost Group, which is run by Seth Klarman. Obviously, there's a lot more people than just Seth Klarman that work at Baupost, but it's something that I like noting. And I wish that we could see what his bond portfolio and credit portfolio looked like, because I know that their credit portfolio is probably massive compared to their stock portfolio, or at least equivalent. But what you can see on the right here is the activity for the month was Garrett Motion had a 609% increase, Seagate 340%, and Jazz Pharmaceuticals with 40% that you can kind of see. What else he added to? The pickups that he had this quarter was Amazon, Dollar General, Union Pacific, and CRH. The Amazon position was kind of interesting. I don't know why all of a sudden, they decided to buy into Amazon. But again, when you have a company like this, a lot of times they run hedges. So it's one of those things where if Amazon goes up, they make a lot of money. If Amazon goes down, they probably have a hedge position built in. And part of it too is the positioning and how they run their portfolio. Now, as far as sells go, kind of the bigger sells, so he sold off of Google, which made up a lot of his portfolio. They sold out of Corvo as well, which made up a lot of his portfolio. Then you had Skyworks Solution, Fiserv, Lithia, Digital Bridge, and Horizon Acquisition, which was 100% sell. So, the other three at the bottom didn't make up a huge portion of their portfolio, but it's still something of note because I think it's relevant. But I think that overall, it's Seth Klarman's more or less just positioning himself and managing the portfolio. But I would love to see the credit portfolio that they have on hand, because I can only imagine, given where yields are currently, that they are probably making money hand over fist on the credit side of the business. And that's something that if you go actually onto Howard Marks's kind of podcast that he had, they've been talking about it too. So a lot of the value investors who are kind of run more of a hedge fund, or they run more of kind of a group rather than just a stock portfolio, are using credits and high yields to get a lot of guaranteed money rather than just investing in stocks and watching them go up and down. So that's something of note, but I think that Seth Klarman overall didn't do anything crazy this quarter, and I wouldn't be surprised to see more or less the same next quarter. Next up, you have obviously Warren Buffett. This wouldn't be a value investor recap for the quarter if we didn't include Warren Buffett. I didn't include the portfolio here just because there's so many companies that they have and a lot of their managers and things like that. So I didn't include any of their, I didn't include the whole portfolio just because, again, it's a large portfolio. So I just included activity because I figured that would be enough anyways. So of note, though, Capital One Financial, this has been a company that they have been adding to. I think that they have just shy of the 10% mark as far as what they own. They started investing into this kind of beginning of this year, and they've been adding to it since. It's not that surprising given, again, what happened with the whole banking crisis that we had, I guess, over the last kind of first quarter into the second quarter mark. Oxy is something that they've been investing to heavily. So again, not that surprising. The three new buys for them are DR Horton, NVR, Lennar Corp, and then obviously something that we saw. So going into Q1, or really end of Q1 into the annual shareholders meeting, a lot of the talk was around Paramount and talking about Para and where it is and why they have it in the portfolio, because Warren Buffett himself made quite a few comments at the annual shareholder meeting, and it wasn't in support of Para. But again, he probably wasn't the one that bought it. It was probably one of the other managers underneath him. So that's fine. And I think he trusts his managers. So there's no issue there. But I think a lot of people, given his comments, kind of expected Paramount to be sold off. But there was no sell. So it's interesting to me to see it's still being held on the portfolio. So moving on, though, Chevron Corp got sold at, cut down a little bit. Celanese, General Motors, Global Life. Then Activision Blizzard got reduced by 70%. And then obviously they sold out of McKesson, Marsh & McLennan, and Vitesse Energy. I probably didn't pronounce that correctly. But nothing huge happened this quarter as far as buys or sells. It's just more or less kind of positioning the portfolio. And again, they have more than just Warren Buffett running these portfolios. So it could be any of the managers that are buying this. Sometimes you can see like what's obviously Warren, which probably one of the banking companies are probably more Warren. And the larger positions that get made are probably Warren. But they have a lot of other managers, and obviously their companies that they hold that hold positions like their insurance companies also get included on here. Next up, we have Guy Spier. So Aquamarine Capital, he made no activity this quarter. This is the most Guy Spier thing to do. I don't think he's made any activity since Twitter got bought this time last year. And that was he just sold it off because it just happened to run up. So one of the interesting things, though, that I found was Lilu and Mohnish Pabrai, who are both very good friends with Guy Spier, very good friends. Both of them sold off Micron, and Guy Spier did not. I don't know if he sold it off by now, because again, they could have sold it at the end of, like, right before Q2 ended, and then Guy could have sold off after Q2 ended. I don't know. Guy is not one to really sell all that often, so it wouldn't be surprised if he still holds this, position. But for them to sell off Micron and him not to sell it off is a pretty interesting thing to see. So I'm curious to see next quarter if we see any sort of updates from Guy. But again, Guy doesn't make any moves normally, so he's a pretty buy and hold kind of person versus Mohnish and Lilu both are as well. But again, Guy Spier is like Lilu and Mohnish Pabrai, where he has foreign positions that don't get reported here. So in the foreign holdings, he may have more companies that go in and out, but in this U.S. holdings, he doesn't really make any moves ever. Next up, we got Bill Ackman. Pershing Square is one of the kind of bigger hedge funds, bigger, well-known value investing companies. So to see him kind of make a lot of moves in a quarter is very interesting to me. And I actually love Bill Ackman's investing style. I love the way he talks about companies and the way he views companies. So for me, I love watching Bill Ackman's move. I love seeing his Twitter because he's very active on there as well and kind of explaining sort of different ideas. So on the quarter, though, you can see on the right side, activity-wise, he bought more Google, bought some Howard Hughes, and slightly added to his Hilton worldwide holdings. So, as far as buys, nothing crazy. He did add significantly to his Google position, but as far as what they've been doing on the sell side, so Lowe's got reduced by 25%, Chipotle slightly reduced, QSR and CP as well slightly reduced. Overall, the portfolio is mostly positioned so that, if consumers do well, the portfolio does well, and if the consumers don't do as well, a lot of the other companies kind of make up for that difference. And that's kind of the definition of what he does. It's finding companies that are sustainable, that produce free cash flow, that make a lot of money, and in good or bad times, they're going to do well. He did sell out Netflix last year, which wasn't surprising. So Netflix has run up significantly since he sold it off. And I'm sure that for him, it's probably water under the bridge. I don't think he really cares all that much. But it's interesting to me to see that they haven't added anything significantly this quarter. But I'm curious to see with his Google position and given where their reported pricing is at, like kind of what they bought this at originally, I wouldn't be surprised if, we see some sort of sell-off as the fangs keep running up. That wouldn't be that surprising. And then lastly, we have Daily Journal Corporation. I'm going to have to make a video on Daily Journal separately because we're going to do a review of the quarter. But Daily Journal Corporation, again, Charlie Munger making no moves, obviously not surprising. This company, the portfolio was never meant to be like a portfolio holding company. This happened to be where they put their excess money. And at this point, they're taking out a lot of margin loans against this. It's basically using this as a piggy bank. So taking this portfolio and kind of taking a look at it, again, not surprising that moves didn't get made. And then obviously as these companies do better, again, banking kind of went down the drain this year. So as the companies do better, we'll see this kind of run up and then be able to use this margin loans for more of the business side. So with that being said, thank you all for joining me today. I hope you found this really interesting. I'm really enjoying going through these quarters, and I'm looking forward to doing some quarterly reviews for some of the companies that we have here in the portfolio. By the time you see this video, the Revolve video is going to be coming up next if it's not already up, so stay tuned for that. I'm putting this out the same day that I'm recording it. So with that being said, thank you all for joining me. I hope you found this quarter interesting. Make sure to do your own deep dives on some of these companies because I think there's some opportunities there. But with that being said, thank you all for joining me. Have a great day and happy investing.